Heidi ho, everyone, and welcome aboard. It is Tuesday, the 8th of September. Really? How did that happen? Don't know, but here we are. And that means hang on a sec, I'll get my hands out. October, November. Oh, right. 3 months after this one. And that's the end of the year. Holy Toledo. My, does it fly. I'm Jeff, and I'm coming to you live from Tasmania in Australia, and it's good to have you on board wherever you may be. I'm just trying to find out why I can't see anything on YouTube at the moment, so I am a little bit distracted, guys. Just bear with me, and I'm sure we will get there at some stage. Might be no, it'll be before we finish. Yeah, absolutely. This is crazy. Okay, got it. I think we're there. It's called Online Trading Profits for some reason. I don't know why, but that's kind of the new brand, I guess. As I was saying, welcome aboard. It's good to have you there. And without further, well, there wasn't really much chit chat. In fact, there wasn't really much at all. It was all me just getting set. Let's go and see if we can find it. Well, find some more money, I suppose, is the absolute. I am hopefully sharing the right screen, which is the pound US dollar on the 1 hour chart. Yes, it looks to be the case. And that's where we start the day, of course, or that's where I start the day. Hi, Alan. Hi, Swee. Yeah, look, that was a weird thing. I was in my strategy session this morning, guys, and the platform disappeared from beneath me. It was just crazy, and I couldn't do a thing. I had no control panel, nothing. Couldn't restart it. It just crashed, and crashed. It certainly did, and I couldn't do a bloody thing about it. Very frustrating. My apologies for that, on behalf of whatever happened. Don't know. Anyway, you guys should still be in this one from yesterday, actually. No idea how you're trailing this, but you should have taken 2 lots of profit, and you should have your stops at entry right now. I've left them there because I think the daily pivot is an interesting little backstop that we have. But to be absolutely frank with you, I'm expecting that we're going to get a bit of a rally on the pound today. Not necessarily against the dollar, I've got to say, but against a few other things. And we'll have a look at those a little bit later. Just sell for OCO. That was yesterday, yes. So today, no buy as well. Let's have a look. I don't know. I haven't had a look yet. Let's check it out. Shall we? No reason why there's no buy that I can see. Let's bring our little cheating EA back in, so I don't have to disappear for a period of time whilst I look for these prices. So sorry, you're going by, I guess, the screen, which is inaccurate. That's yesterday's. So let's take a look at today. The entry price for the sell will be below this bar here. The stop loss will be above that bar there, and I'll get the stop loss while I'm here. 131.46 will be the stop loss for the sell. So we'll change that. Stop loss for the sell will be 131.46. And the sell price will be at 131.27. So only 19 pips there today, 131.27. And TP1, we will look at very shortly, but I'll just put that up and take those off for now. So get rid of that. And get rid of that. We'll come back and talk about that. So that's the sell. The buy, and there will be a buy. I don't know if it'll trigger, but there will be one. 131.60 will be the buy price. 1.3160. And the stop loss for the buy will be the low of the bar we're trading, and that will be at 1.3133. So that'll be the stop loss, 1.3133. Okay, and again, TP1 and 2 we will discuss. So there you go. There are your parameters for today's pound US dollar OCO. Get rid of that. Welcome to those of you joining for the first time. It's great to have you on board. Ash not in today. It's his day off, as we always do now. We alternate Tuesdays and Wednesday sessions, and Ash is having the day off. Normally I'd be joined by Orlando at this point in time, but Orlando's given me the sack. Just contacted me a couple of hours ago, no, not even, an hour ago, and said, no, you got the sack. Don't want to go on anymore. Not entirely true. As we know, Orlando lives in a different part of the world, and he is asleep normally at this time, and has been very, very generous with his time in the UK session, and has decided that he does need a few more hours sleep than he's been getting. So he will not be with us on the Tuesday UK session anymore, and I get that. You've got to have your sleep. There's no point sitting in front of a chart and going, oh, gee, wonder where it's going next. It doesn't work. And speaking of which, I made a mistake yesterday. Yes, it's true. I did make a mistake, and I'm going to go through that and show you exactly what should have happened when we traded euro dollar short yesterday in, I'm not sure what session. Might have been in here. If it wasn't in here, you guys were lucky to escape, and I'll show you the result of that and exactly what we should have done. Very lax of me, very, very lax of me. Yeah, look, not a bad idea either, Lewis. Ainsley, as you know, is a mum, and around about this time of day in Sydney, it's getting very, very close to dinner time. So I will ask her if she's willing to pop in for maybe even 10, 15 minutes or so. And yeah, it might be a good idea. It's not something that has escaped me, I must say. Right, let's talk about TPs 1 and 2 on this, the pound US dollar breakout trade, because we have changed a lot in the preceding. Yeah, not really the word I wanted to use, but in the not too distant past, let's put it that way. And what we're now doing, and this, of course, is at a, again, still a beta. Alan, no, Ash not in today. Is still in beta test mode. So here's the way we play it at the moment. This is the next lot of tests, if you like. What we're doing is we're picking the low of the last 3 bars of the pre-London session, as always, so on an hourly chart. So this one, the big doji, the low test bar, and the bearish decisive bar are the range. So the high of the range is this one, and the low of the range is this one. What we're actually doing is we're trading the candle that produced the low, so this one here, and we're putting our, and I haven't even done this yet. Let's, well, not a sell limit. I don't want to sell limit. Get rid of that. And you guys can't see that either. I'll have to change that. Let's go with a sell stop, shall we? Because that's what we want to do. Only 0.25% we're risking on this, guys. Look, I would suggest you don't even do that, frankly. I wouldn't be putting serious money on these until we get them proven to be exactly what we want them to be, and that is regular winners, of course. So the entry level for the stop is 1.3127, as we know. And for those of you who don't know why that's the case, it is simply the low of the low bar of the range. So 1, 2, 3, last 3 candles pre-UK session. The low is, on this occasion, 1.31274. So we simply round that down to 1.3127. And we put the stop above the candle rounded up. So 1.3146 it becomes, the high being 1.31458. We just round that up. And we do exactly the same when we're going long. We use the bar that produced the high of the last three candles prior to London session. And that price on this bar is 1.3159. I just added 1 pip, so that becomes 1.31. Oh, that's wrong. 1.3160 is actually the buy order. Don't know how that happened. 1.3160 is the buy price. That's a bit better. And the stop loss for the buy is the low of the bar rounded down. So that's how it happened. 1.3133. We had it in the wrong place. Okay. 1.3133. Okay, so let's put that in here. So we're selling at 1.3127. Stop loss is 1.3146 for the sell. Now, this being an OCO, those of you who are not sure what an OCO means, it means one entry cancels the other entry. So if we get triggered short, we cancel the long. If we get triggered long, we cancel the short. And here's how we work out our take profits. We are looking for a profit of at least half the risk of our candle, right? The candle that we're trading. So if we're looking at the buy price, 1.3160 has a stop loss of 1.3133. That's 27 pips of risk that we're carrying on that single candle. So what we want to do is take profit at 1.31 in the middle somewhere, right? So we take 27 pips away from 60, we get 33. What we want is half of that. So half of 27, we go to the lowest part, is 13 pips. So our first take profit is at 1.3160 minus 13, which is 1.3147. So that's where we will take our first profit. Now, there is a caveat on that. If there is strong support or resistance prior to that, what did I say? 13 pips. 13 pips. Then we take profit at the support or resistance. So let's find out where 13 pips is, or 1.3147. 1.3147 is, what am I doing? I'm on the buy. I should be adding it, right? I'm a dipstick. 1.3173. Let's go that way, shall we? There we are. So that becomes our first take profit level, 1.3173, because it is half of the candle, or half of the size of the candle that we are trading. So we want to take half of our stake off at that point and move our stop loss, whatever we take off the table, which in this case is, pardon me, 13 pips. We move our stop loss 13 pips from our entry. Okay. Does that all make sense? So we're buying here, we're taking profit at 13 pips, and we're going to move our stop loss 13 pips from entry when we get triggered, if we get triggered, out TP1. Now, the reverse is, of course, the same. And let me see if I can get this one right. Selling at 1.3127, our stop loss is at 1.3146, which means we've got 19 pips of stop loss. Therefore, we're looking for a first take profit of 9 pips, which is half of that rounded down. So 9 pips from 1.3127 becomes 1.3197. And that will be where our first take profit is, 1.3118. And there's nothing in the way here, so that will indeed be the first take profit on the sell order. And again, we would remove 50% of the position and then move our stop loss the same amount of pips that we took off at TP1 from entry. So in this case, it would be 9 pips from where we enter the market. We put our stop loss, we trail our stop loss to here. And of course, that gives us what we know as a free trade, which is the whole point of the exercise. So once we're in that free trade situation, we then look at TP2, and TP2 is an optional management tool, if you like. But as soon as we get double our risk candle, so in this case, 1.3160, 1.3 is 27 pips, as we discovered before. Once we hit 54 pips of profit, we would then do whatever you want to do. But what I would do is definitely move my stops to entry, locking in that little bit more profit. And you may want to reduce the risk that you've got left, which is half of the position, in half again. That's another way to do it. So 0.25 off the table of whatever your risk was at that point, and move your stops to entry. It's exactly the same going in the opposite direction. So that's the way we're managing this at the moment. And I don't think I've really got that through to most of you guys in the recent past. And my apologies for that. Okay, we're all up to speed with the pound US dollar breakout trade. So yesterday we got entered here, and this was the range, 1, 2, 3 bars. We got entered here. Our stop loss was here. Obviously, that candle was through there before we got taken in, and we got TP1 at half of our risk, TP2 at double our risk, which was just about here somewhere. And since then, we've gone on with the job so far. So my stops are at entry. I haven't taken a second lot off the table, but that probably was a good idea if I had done that. We'll see. See how this candle moves and what it looks like maybe at the end of the hour. Righto, so let's get rid of that now, pound US dollar. If I was trading pound US dollar today, and I've got to say, you know, I'm still really a pound bull. But that said, we have had a bit of a fundamental interruption to that particular scenario in Brexit negotiations, which of course have, as usual, there's nothing new here, have broken down, and it looks once again like we're headed towards a hard Brexit. And of course, all commentators will tell you that a hard Brexit is bad news for the UK, which equates to bad news for the pound. You know what? I don't know if that's the case. Really don't know. The market will tell me that at the time. But the market's certainly speaking at the moment, and it would appear that that is the logical conclusion to a hard Brexit. And because the talks have broken down, then guess what? That's what the market thinks. Market knows everything, don't forget. The other way to look at that, which of course is the way I look at things, is, well, okay, how bad is the breakdown? I mean, we've seen so many breakdowns in these negotiations before. How bad is it? I mean, is it the worst thing that could ever happen? And I know we're getting closer to the deadlines. That, of course, makes a difference. But I tend to suggest that, well, you know, pound's been having a pretty good old run here, and this is against the dollar. And as I said, I'm not really a fan of trading against the dollar at the moment, either for or against the dollar, actually. But that said, once they've had their little emotional, and I'm talking about the market and the traders here, once they've had their little impulsive or emotional reaction to that, then I'll go there in a sec, Sino. Yep. Once they've done that, then I would suggest that unless they can drive it below this low here, which potentially, of course, is a neckline on a left shoulder, head, maybe right shoulder, then I'm thinking, okay, we get to rally again. And that's kind of where I'm at. So I'm looking for a bounce point here on the pound. And that probably comes around about there for me. So I'm looking at that level very, very closely, and where we've got our take profit level, TP1 for the short here, may well have provided us with a confluence area. It's not far off it, is it? So maybe that's where we need to be looking. Of course, we're on a daily chart there now, and that's a fair way from now. That won't help us today, unless, of course, we can find a way to continue this short to take us down to that point. So I guess that's my bias. I've just worked out my bias on pound US dollar based on that very, very scenario. So DS1, let's talk DS1, eh? And if I can find a way to trade that, would I? Maybe after a daily pivot test, but that's going to keep me very, very quiet, I should imagine. Righto, so that's all I want to talk about the pound. Let's get out of here. Euro CAD. Now, I've sacked IFS because IFS is just not doing what it should do for me. So let's go to these bear charts today, and I've done absolutely no analysis on them in terms of putting my lines on my chart, but Sino is suggesting there's a potential slingshot trade on EuroCAD H1 for a short. Okay, I see what he's saying, because what Sino is looking at here is a beautiful little trade line. Actually, it's a really nice trade line from what I can see. Maybe not from there, but the next one up it is. Looks very nice. I like it. The thing I don't like is now we're getting a second low test bar. I hate that. I don't like to see them in a row. There's also the hint, if I go to a 30-minute chart, so I think I may just find, no, I can't. I thought there might have been I thought there might have been a little high in here that I could go like this. It's pretty close, but it's not there, which would then give me a potential false break of this area as well. It's certainly giving us some warning signals. There's a shot over the bow here. There's a shot over the bow here. As we approach and pull away, this time substantially pull away, and that's exactly what we like. I may well consider this candle either on the 30-minute chart or the hourly as it closes. I like your vision, Sino. It does look good. Wish I could validate this trade line through here. That would be also good, because it's giving us a nice little tick in the box. So yeah, not against it, mate. And of course, my bearish bias gets me interested as well. Why have I got a bearish bias? Well, if I look at this chart, and I've got to say it's getting a little bit long in the tooth. And Batman's mask is kind of getting deformed over here. What we were really looking at on this particular chart, if I can grab a pen come hither. What we were looking for on EuroCAD, and of course, as soon as we see this double top, and this is a daily chart, but it looks just as good on a weekly and a monthly, I consider what happens next, and I draw a line of symmetry straight down my chart. I actually don't do this, but in my own mind, this is what I do. And I replicate what I saw over here to this side here. And this all looked really promising, in my humble opinion, when we got down to here and started to go into consolidation, just like we did over here. And I guess, at the end of the day, that's not very straight. We're kind of getting to that vicinity, but Yeah, it's kind of gone into trend. I'm not a massive fan of that. I've got to say, it's taking too long. This went up in a heartbeat, and this really, to my mind, if it was going to replicate the other side, should have come down in a, well, not a heartbeat, but certainly by the elevator, as we all know the saying goes. So I'm a little bit dubious on that now. I haven't dismissed it, not by any shots or stretch, but it does concern me just that little bit that we are taking so long. Certainly, it looks like a new market structure without question. There's a channel forming there and has formed, and that kind of again leads me to, okay, where are we within that structure? And we spoke about this last week, and I remember Swee was talking about breaking of this range and what happens next. And we both decided that the best course of action was to wait till it hit the monthly pivot as a false breakout. And it did exactly that. But of course, it went in a heartbeat, and it was very, very difficult to pick it up. Since then, we've had a massive reply from the buyers, and we've now started to form a range just below the range that it's broken out from, if you like. So that all becomes very, very interesting. And if you follow the way that I analyze things, and I can totally get it if you don't, because it's sometimes fairly radical, I'm always looking for a bounce off something. And generally, I don't care what that something is, but it needs to be a market structure of some kind. If it's a channel, a rectangle, a triangle, and we were even talking about circles at one stage, but I haven't found a way to find them. Maybe one day Bitcoin might fix that up. Shukri will teach us how to do that later. Find circles. Maybe not. Anyway, the way I look at it is, if we're coming from the top of a range, and I call these things ranges, I totally looking for the next bounce point, which generally is going to be the bottom of the range. So top to bottom, just like here, top to bottom, bottom to top, top to bottom, bottom to top, top to bottom. So that confuses the issue somewhat, because I'm now expecting price to go to here. But there's also a big hurdle in the way in the weekly pivot and the daily pivot. So this one's not as easy as it would, well, maybe in a week's time appear. And it's because of this decisive collaboration of pricey, or AKA a consolidation, I suppose. But it's very, 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 very hard to read. One day down, one day up, one day down. This candle here is interesting. There's no question. But I also don't like to see that candle there. I'd love to see that candle here, just as we saw this one, and just as we saw this one, and just as we saw this one. High test bars in the right place are absolutely beautiful things, no question. And if they've got a white body, that interests me even more if we're looking to trade them short. And that's the question I've got here. You know, yes, we've bounced off the pivots, both daily and weekly, and we do have reason to think that this is going to go short. But is it the right place for me to go short is the question I ask myself. And if I have a look at this 4-hour chart, it even looks more promising. And for those of you who are slingshot aficionados, you'll understand exactly what I'm talking about straight away when I put that trade line in. Perfect it isn't, but by gee, it's doing the same thing. It's coming, it's going, it's coming and going. It's really giving us fair warning that this is going to break to the short side, in my humble opinion. But can I trust it? It's out of context. Well, when I say out of context, it should be up here. I want to trade this off resistance, not at a support level. And that's why I'm a little bit spooked by this at the moment. Totally see it, totally understand the setup, but it just has me questioning. And I think until I do get that opportunity to trade off resistance, I'm going to have to let this go. But is this coming? Absolutely think it is. Absolutely think it is. Batman mask torn, got punched by Jokers. You could be right, LT. Something's not right in that little Batman mask scenario that I've been looking at for some weeks. It's got me a little bit spooked, I've got to say. So yeah, I'm a little bit off on this one at the moment. Totally see the warnings, but I just don't know. I really just don't know. If I see the right opportunity, which will come hopefully as a resistance false break, then yeah, I'm in. But at the moment, question mark, question mark. What else have we got, guys? Oh, the mistake. Let's go to the mistake, shall we? I need a good kick up the arse for this. I really do, because it's something that I kick myself up the backside for when I do it by myself, much less in front of other people. And very, very frustrating when it happens. It was euro dollar. I'll probably have to go to IFS to show you, actually. We traded it short here on a 30-minute or hourly chart. Can't quite remember. Cannot quite remember. But let's have a look at the 30. No, might have been the hour. Yep, there it is there. Okay, so what we had was imperfect, and I said it at the time, it was imperfect, but it looked okay as a nice little speculator because we'd bounced off the monthly pivot and we'd put in a couple of lower highs here, and the lower high was probably the reason I thought this was ready to go. So I can't remember where the trade line was now. Remember the candle. Maybe it was a 30-minute chart. Let me go there. It was a false break anyway. We're trying to play a false. Okay, there it was. Let's just tighten that up. Okay, so we had a trade line coming through here. And that's right. It didn't set up on the 30-minute chart, and I chose to trade it on the 1 hour chart. That's exactly how that worked out. Right, so the trade line's coming through here on the 30-minute chart. What we probably, two things we should have done here. Number one is we should have placed our entry here underneath this bar. Okay, I know it didn't retest the trade line, but eventually we did get that retest. Instead, what I did was, and the other thing we should have done is definitely put our stop loss above the daily pivot. No question about that. Instead, what we did is we switched to the hourly, or what I did was switch to the hourly chart and found that we did get the retest with this bar here. And I said at the time, I don't really like the bar, but we're going to take it on trust. And we entered here, and it took about 16,000 hours to actually do anything. But eventually it went long before it went short and took us out. Now, our target was down here and would have got hit had we done probably the first of what I just said, traded on the 30-minute chart. But the real mistake I made was I put my stop loss here. And I'm not saying that we would not have been taken out. We may still well have been taken out. But pardon me, the place to put the stop loss, and here's what I want you guys to take away, was there. And the reason it was there is because it's got so much price action. Broke here, come back, support, 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 resistance, resistance. It's a level, and all our friends like Orlando and who else trades that way? I think maybe Lloyd they're the key levels that we need to be conscious of. And I wasn't, well, I was lazy. I'll put it that way. I was lazy. And I was trying to get maximum profit for little risk. And it was wrong, simply wrong. The setup was there, yes, because we did have a break. We got the lower high, we came back below the trade line, we retested the trade line. So the setup was there, imperfect as it was, but we actually put our stop in the wrong place. And that's what I want you to take away from this. Although the strategy was based and is always and has been based on trading a candle, it is a dumb play when you've got a strategic level above you. And that's why on the pound US dollar trades that we're doing at the moment, that I'm actually trying to show you guys that that's the bloody strategy. Put the stop loss and take the profit where the stronger resistance and support are, not where the top of a really insignificant candle is. So take that on board, guys, please. Do as I say, not as I do, I guess, is what I'm coming from there. So I made a blue, and it happens, and I'm quite happy to wear it when it does. But going back to analyze what you've done wrong is also very, very important, and that's why I've done that in front of you guys today. Now I can go to sleep tonight and say, well, okay, conscience is clear. I'm a dickhead, but at least I know I'm a dickhead, and I won't do it again. Should I promise myself that? That's the key, isn't it? Really, acknowledging you've made a mistake and then not making it again. That is the key. But sadly, I can't confess to have absolutely learned that lesson over 13 years of trading. I still do it. See, I still do it when there's an absolutely perfectly good level to have a stop loss above me. And it wouldn't have cost that much. Another 4 or 5 pips, no big deal. Righto, that's the end of the lamentation for today. Let's see if we can find something to trade, shall we? Okay, we've gone past the half hour, which means we can now trade. The reason I don't trade the first 30-minute candle of London session is that it has cost me many, many moons, many, many dollars over many, many moons. So have we been triggered short? 1.132, yes, we have. And TP1, where's TP1? 3127, 314, 19, 9 pips is 18. We should have taken profit. First take profit should be done. Okay. Guys, do that. Take your first profit, move your stops. 9 from entry if you haven't done. Hang on, we're not there. Sorry. Don't do that. Don't do that. I was looking at the red line thinking that was the price. Incorrect. And I don't think I've even been triggered yet. Low. No, we haven't been triggered yet. Okay. Oh dear. I'm having a Barry Crocker. So it does give us a break in RT in M30. RT. Just give us a break in RT in M30. Lewis, please explain. More information. It does give us a break in RT in M30. Can you just expand on that, please, mate? Because I'm not getting the RT. No doubt, retest, right? Retracement and retest. A break and retest in M30. Yes, it does. It does, but over 2 candles, which is not what I want to see. And let's go back there, okay? It's not what I want to see. What I want to see is pretty much what I'm seeing at the moment, but not quite. If you have a look at this particular scenario that we've got right now, we've got a break. The one thing we don't have is consolidation enough for me. This is emotive as far as I'm concerned. What we want to see is at least 2 candles of consolidation above the breakout. And what that gives me is enough time for the market to actually make a decision. Here and now, I can see people just going, oh, okay, it's hit the daily pivot, we need to go short. And then I see maybe we don't need to go short because we've got a big hammer sitting here, or a bullish engulfing bar sitting here, or a double bottom sitting here. That's what I see at the moment. I'm seeing multiple reactions in a very short space of time. What I'd much prefer to see is, like we saw yesterday, 2 candles of consolidation, then back under, then the retest. So whilst I can't say to you this is not a scenario that you can trade, because on the 15-minute chart, you've got exactly what I'm talking about, no doubt. Let's go there. Yes, we have. But the difference here, again, is we haven't come straight back, which is what I want to happen. I want that emotive reaction after we've come back. I want the retest to be emotive. And if it's not emotive, price will continue to go that way. If it's real and it's meaningful, price will continue to go that way. But if it is emotive, and actually this bounce off the daily pivot is real, then it should go short. But I want to see it happen straight away. So it's like a 3-stage or 3-act play, if you like. Break, consolidate, re-entry, retest. That's a 4-act play. The consolidation is important because it then gives the market time to analyze what's taken place. Then we get the one back, and then we get the retest straight away. So that's the classic setup. This is not that. And nor was yesterday the classic setup. But yes, the retest is very, very important. But I'd like it to happen straight away. Hope that helps. We were on the pound, and we have now been triggered short. So you're on notice to get TP1 off the table at 1.3118, which is about 8 pips from where we are now. So hopefully no time. Hope it goes there. But that's the level that you'll be looking at now. Let's get rid of the buy order. That can that's the sell. That's the sell. Where's the bloody buy order? Should be there. No, okay, I'll do that another way. Anyway, call me back, guys, if that goes through 13118, and I need to take profit there. And of course, yesterday's trade's going well again. We're still in that one. Righto, so what did I want to talk about today? I want to talk about the trade I took this morning, in particular, those of you who are in my strategy coaching and TTR shows, because I did place an order this morning, but I've got to say there's plenty of time to react, because it is US dollar yen on a daily chart, but it's going back 6 candles. Yes, I know. I normally cancel my orders after 6 candles of inaction, and certainly we've had that inside bar, inside bar, inside bar, inside bar, inside bar, inside bar, inside bar. But to my mind, and I'll go through this, to my mind, this particular pair is and has been in a bearish scenario for quite some time. Now, I'm not talking, and I can't really give you I need to go back further in time. but there's big double tops over here, and that is the governing pattern in my humble opinion, and has been for, well, years, many years, and I expect that this will continue to be the case. The one thing here that's interesting and kind of goes against what I'm saying, but you've always got to have a look at the reverse side. There's no point having an opinion and not looking at someone else's. There's a big inverted head and shoulders here, and we've tested or retested the right shoulder here and rejected it. That's interesting. But if I maintain my bearish outlook, which is based on the trend line that you see there, I still think that the net result here is going to be short, and at the very worst, I think we'll have another retest of not only the right shoulder, if you like, but also the bottom of this channel. So that's what I'm playing on at the moment, the bearish bias that I do have. When I combine that with something that I call, I don't, not just me, that calls this particular scenario a key reversal. And on the weekly chart, you can see that we've got bearish, well, it's not a bearish engulfing bar. It's a high test bar, rejecting the monthly pivot, the weekly pivot, and the daily pivot. And then we've got a bullish bar that retests all of those things, but it is still an inside bar and stays inside that candle. So it hasn't engulfed it. So the net result of that for me is a potential acceleration point through the bottom of that candle, the one that's just formed on the weekly chart. If I transfer that to the daily, and you have a look at this bar here, which is also a key reversal bar, and fully engulfs 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10, let's say 10. You could all, now I'll go, let's go 9.5. That candle has engulfed 9 days of trading, and even beyond that, if you go into this area here, many, many more. And now on the other side of that, we've got 2, 4, 6, and now into the 7th day. So this candle has got a little bit of grunt, don't you think? I think it's fully powered. And for that reason, it's the one that I want to be following in terms of direction. I've also got a whole lot of confluences going on here. If I were to bring this down to here, for instance, I've got a break and a retest of this trade line, the weekly pivot of last week or the week before last week, the monthly pivot of both the month before and the current month. And I've got that that bearish engulfing bar and the retest of everything. It's just, for me, something that I can't ignore. So for that reason, I have placed an order short. It's a long way around giving you this, I guess, but to me, it's something that I can't overlook. And I don't know why I didn't pick it up last week, to be honest. But there you go. The entry, if you want to follow it, is at 105 point, let's say 27, 105.27. Is that right? Doesn't sound right. Yeah, it is right. No, it's not right. Oh, hang on. I'll have the order here somewhere, won't I? Dollar yen, dollar yen, dollar yen. I've sacked it. Here it is. No, I thought I had the order there, but I don't. I've obviously got another chart. Okay, I'll give you the exact level off this one. The low of that bar. So 105.19, 105.19 is the entry level. And the stop loss You will note that I'm not trading the candle here. Is it 106? Where? Pretty much where price is actually 106.25. Let's call it there. 106.25 is the stop loss. Now your TP1's pretty clear. It is at 104.70, 104.70. And your TP2, well, take your pick really. I think I'll just call that when the time comes, but it should be around about 104.20, I would imagine, for your TP2. And I won't take anything off the table there. I'll just move my stops to entry. Okay. So a third off at the first TP, nothing off at the second TP, just move my stops to entry and see if this can go. And if it does, then, you know, we're talking 101s. And I think I'd be happy with taking something off the table there. There's a better chart, isn't it? That's a better chart. That shows you the reason for being completely bearish, this, because it has got, let me see if I can go one more, has got this massive double top over here, which of course is the potential neckline. So you can take it that way as well. Down the track, it may well go through there, but not at the moment. I think at the moment it's going to come and match these lows at the very least. So that's what I'm counting on. Righto, so that's dollar yen. That's the only trade that I took this morning. I've got 4 more on my watch list, and I'll go through those. Euro Swiss is right at the top of that, and this is something that's repeating itself on quite a few charts, the Euro charts in particular, and it is something that I do like to trade most often, and I call it it was my version of Three Little Indians. Now, Three Little Indians is a recognized chart pattern, and I don't know if it's got anything to do with mine, frankly. I think it's something to do with it, but I like to see a false break followed by a false break that is higher, followed by a false break that is higher still when we're coming out of a range. And that has certainly been the case on Euro Swissy on the daily chart. When I see that, I immediately think we're going to break this range, not to the high side, but to the low side. We've got a nice little double top that's formed there. Okay, it's not perfect, but it's also a nice little double top. And if you go to the weekly chart, you can see that strong level that price is currently at. So I'm looking for a lower high here. And as soon as I see a lower high, and I don't care what time frame it's on, if it's a significant lower high, I will be trading this short. It would also be very, very nice if it coincided with, let's say, a false break of resistance. So if we got above here, don't take out the high because that's going to be a little bit messy. But then come back under, play the false break, and whippy-do. Now, it's also true that when this does occur, that is break to the low side after 3 consecutive breakouts to the high side that are higher than the previous. When that does occur, it often does not last. So I'm not thinking of, you know, this reversing to the end of the planet. What I am thinking, that we'll break through and then we'll go to probably the next significant horizontal level, which in this case will be 107. And that's about as much as I really want to get out of that trade. And of course, I don't want to trade it from here. I want to trade it from up here somewhere. So that's my absolute course of action right now. And it's also true of, I think, euro dollar, if I'm not mistaken. Or am I mistaken? I've definitely seen it somewhere else. Oh, no, there it is, yeah. So that's the 4-hour chart. Let's go a little bit wider and put the range in. So your range is probably in here somewhere. Might even be there, but I'll tighten it up a little bit and use those lows. So false break. This one's not strong, to be honest. Then this one's exactly the same scenario. And of course, it being euro based as was Euro Swissy, it's very, very similar to what we've just seen. This is, and that was one of the bases of this little snipe that I tried to take yesterday that didn't come off. If I'm completely frank, I want price to come to here and give me the lower high that it was seeking off the return back into this channel. We got it last week off exactly the same scenario, weekly pivot, monthly pivot, and it did sell off, but that's where it seems to be stuck on this little level here. Really like to see it get back up to those pivots and give me something that I can trade up here. If it doesn't happen, then it doesn't happen. But that's why I'm monitoring Euro Swiss as well, because I think it's pretty much going to be the same trade. Euro Aussie, on the other hand, which is also on my, no, it's not on my watch list this week. Sorry, I'll bypass that. But I am conscious, and this is an interesting candle here, to be fair. This could well be the higher low that we seek off the re-entry to the range. But weekly pivot, daily pivot, dead ahead, it ain't going to be a trade for me. EuroCAD is on my watch list. But we've been through that one, and I don't need to go through it again. I need to be patient on that. And of course, Euro Pound, the trade that we were in for quite some time, has now come back above our support trade line, weekly pivot, monthly pivot. Sorry, that's not the weekly pivot. Let's just say monthly pivot. But certainly the trade line. So this is looking more to me now like a potential long, would you believe? Yet I am still bearish the pair. This has been really a tough one, hasn't it? We've tried, on quite a few occasions to get to the bottom of this range, and I think we've probably traded this 3 times now, and can't get any real traction from it or money from it either. We're just getting little bits every now and then, but really nothing of substance. So I'm interested in where it is currently. I haven't sacked it. I still have the basic principle that we have come off the top of the range and we've got a lower high in place. The one thing that we can't get, however, is that lower low. We can't get through to here for some weird and wonderful reason, probably known as Brexit. But, who am I to say? I'm no fundamentalist. And like I said, if they continue to talk Brexit and the supposed, if you like, negative effect that has on the pound, again, it's probably right. But that's not the way I think. I think if they keep talking about it, the more chance it has of going the opposite way. So that's kind of where I'm at. And the pound will be exactly the same. I'll be looking for the pound to rally and therefore this one to go short again. So that's Euro Pound. We've covered Euro Swissy. We've covered Euro CAD. The one thing we haven't covered is Pound Aussie. Now, because of this pound scenario, the market is still very, very willing to sell off on the pound, and certainly against the Aussie, which is looking increasingly strong. Now, we've been in the pound back here, and we've been out of it now for a while. And I've got to decide now whether or not this has changed polarity. The only way I can do that is to judge by this candle here. And if that candle's low is taken out, then I think the game is over, certainly in the short to medium term for Pound Aussie, because that's the structure, and the structure is quite clear. And we're still looking for that bounce back up to this level here. as always, you will find that it's very, very difficult to go in a straight line. And we very, very seldom do, apart from when we came off here, it went pretty quickly from top to bottom. It's doing exactly the reverse, trying to go from bottom to top. You've got to expect that. And I'm, whilst a little bit on the okay, if these people start or continue to talk about a hard Brexit and they do continue to talk the pound down, then this is going to be a difficult one to pick up. But it's quite clear what I need to wait for. And I just need to wait for a rejection of the bottom of the range again, or find a trade line in here that we kind of got there already. And if we can break above that, or even the little range that we've got inside here, if we come back inside there, then I think we've got reason to think that we'll continue the run. But you're going to have these interruptions. There's no question about that. They happen all the time. Pound Kiwi is exactly the same at the moment. And you know we're expecting a big, big run out of Pound Kiwi for exactly the same scenario. We're still expecting that to go to here. We're going to get these disruptions along the way. Let's hope that they're not so severe that they take us out, of course, because we have given up quite a few pips to the market since we, where was that? Probably 400 or 500 pips ago, I would think, where you could say, okay, if we got out there, we would have, well, in fact, it's more than that, nearly 650 pips ago, we could have taken profit there. Would it have been sensible? Well, it's easy to say now, isn't it? But, you know, to me, it was never about anything in here. We took profit early twice so that we could afford the luxury of allowing this to go to here if it's going to do that for absolutely no cost. And that was the whole point of the exercise. Had we taken some money off the table there, then we definitely need to find another way in if we are still thinking that target. And I am still thinking that target. So I don't have a problem with this. It's an issue, and maybe you can manage it a little bit better than I can, and I have no qualms about that either. But that's just the way I see it, and we'll probably in 6 or 8 months' time say, well, that was a pretty stupid thing to do, giving all those pips up, or wow, what a great way to trade, what a great way to stick in, because you made 2,500, 3,000 pips just by hanging in there. Up to you, you know. Jeff, when you trade Slingshot ABC, is your entry candle the A or the B? Well, the candle that creates the B point, is the candle that I trade. So let me point that out for you. Show me an ABC. Let's go to Euro dollar, where we find lots of ABCs. I see one going short, but I can't see one going long right now. 4 hour, let's go to an hourly chart. Wow. I'm looking for perfection, and you rarely find perfection. Let's try a 30-minute chart. ABC for me is generally a break of a trade line followed by a retest of a trade line. There's one there. That is a pretty good example. So let's use a lower. This can happen in more than the ways I traded, of course. But there it is there. That's a 30-minute chart. And, oh, you silly sod. And what we're looking for is a trade line break. So trade line breaks here. It's not perfect, I've got to say, because it hasn't broken by a long way. But you're looking for a break and then a retest pretty much straight away. In fact, as I said before, that's exactly what we want to see. We want to see an instant break back, and that becomes our B candle. So in this case, you've got pen required. You've got a break of a trade line here with this bar. You've got a retest of the trade line here with this bar. And even better still, you've got a retest of the previous support level. And that becomes your A. Sorry, I'll get rid of that. Your A point is always going to be the candle that breaks the trade line. So that's your A point break candle. There's your B, which is the retest. And you see, if you're really lucky, you get down here somewhere. But in reality, you see is probably there on a 30-minute chart. So break is the A candle, retest is the B candle, and you trade the B candle. So you trade there short. And if you're far wiser than I was yesterday, you put your stop loss there. But the traditional way is to trade the candle and put your stop loss there. What I would suggest you do, if you want to try that scenario, is try trading it two ways. Trade it with your stop loss there in one order, trade it with your stop loss there in a second order, and see how you go. If this wins enough to not worry about that, then that's the way to go. But if, like yesterday, and you put your stop in the wrong place and you keep getting stopped out, then obviously that's the way to go. So that's probably an interesting scenario. Now, there is another form of ABC, of course, that happens so often it isn't funny. Oh, and there's another classic one right there. How did I miss that? Let me get rid of this. And there's beauty. Doesn't get much clearer than that. So break, retest, A, B, C, C plus, C plus plus, C plus plus plus. That's about as good as it does get. And you've just come off the top. You don't have a lower high really, which is not as good as it could be. But look at what you've also got a retest of, this level here. So you know, they're the ones that you want to pick up. Difficult to trade because you've got an untested daily pivot below you. That makes it hard. But if you're willing to take profit before that daily pivot, then you can make yourself safe and you're still going to pick up some of that. If not, on a 30-minute chart, I wouldn't be trading all of that. There's no question. I'd only be, in fact, I may not have taken the trade. Oh yeah, okay, 7 odd pips of take profit. Yeah, I would have. So, but I certainly would have taken profit there, no question, and got myself safe in the market. But my exit point, I would imagine, I wouldn't want to go through that level there. So I'd be out there on a 30-minute chart. If you could pick it up on a 4-hour chart, then obviously you're going to pick up a whole lot more. But on a 30-minute chart, I keep it very, very close to the pivots. Don't go through them too much. So I hope that helps, Sino. That is the ABC, and there are absolutely stacks of them. No question about that. You've just got to pay attention at the right time, and when they come, they can be very, very rewarding. In particular, and that's what I want to show you. I want to show the alternate way to trade. When you've got a reversal scenario, and some of the best ones we've had in the last 6 months, pound Aussie was probably the best of them that I saw. And you'll see where we entered the market here for the second time. We entered the market for the first time up here. But what we really saw, and I showed you before, was not just a break and retest that we saw before, like one down, one back, but when you see a neckline break, and this happens very, very often, if a neckline breaks and you've got a big double top sitting here, when that neckline breaks, it often retests it not once, but twice. In this case, exactly as it did. And of course, these previous highs here again, when it retests it for the second time and goes, man, that's when you pick up the big bickies, because that is a super, super way to make money. Second retest of a broken neckline is super duper if you can pick it up. Of course, you've got to have a way to pick it up. And on this occasion, you got a beautiful retest of the weekly pivot as well, and away it went. Happy days. That's exactly what you're looking for. Righto, guys. I think I'm just about done. We've been through a little bit of territory there today, without taking too many trades, of course. How's our pound trade going? Pound. Well, we're in and not doing too much at all, frankly. So we need a little bit of a hurry up here. We haven't got our TP1 yet. The market looks very, very tepid. In fact, it's not even tepid, it's cold. There's not much doing. Not much doing at all. What's the euro doing? Same. It's all going up and down in the one spot at the moment, guys. Nothing too exciting. I would have thought they'd come out of the blocks firing today. Maybe they will in the US session because they had a break yesterday. Maybe that's what we're waiting for, the US session. We will, of course, be back with you. And, of course, we're talking cryptos, aren't we? It's Tuesday. So we will have the company of Shukri, who will be I can't remember what he said yesterday. What's on? Shukri, are you in the room? What are we doing today? I don't think Shukri's in the room. He must be practicing for this evening. September is traditionally the month that traders go away. Look, some say that, and I don't think we're going to have a break this year, frankly, because of COVID-19. I don't think too many people are going anywhere, and for that reason, if you're home, you might as well be trading, I would have thought. And I'm not just talking retail traders, institutional traders, and certainly in Europe, they've already had their holiday. They should be back. So I don't think that that's going to be particularly accurate. I know there's a bit of that goes on with the indices, but I don't think currencies are too much affected by anything like that at all, frankly. So no, I'm going to say that that's not accurate, certainly for this September. But it is quiet at the moment, that's true. We do have, of course, ECB and CAD announcements, bank announcements this week. So that will tend to hold things up a little bit as well. And there's not a whole lot of other news around it. So yeah, I don't think we've got any reason to go into our shell just yet. I'll let you know if I do. But whilst ever we've got motion up and down as we looking at the 30-minute chart here on the Aussie, something's happened there. Somebody's trading. So if they are, I will be. Right, guys, going to go. We will catch you tomorrow. For those of you who aren't in the US session, for those of you who are, Shukri time. It is cryptos for about half of the show this evening, and we'll see you guys then. Those of you in TTR, hopefully the platform holds up in a few hours from now, and we will get a second bite at the cherry. Have a great rest of Tuesday, guys. We'll catch up with you tomorrow. Bye-bye for now.